Sorry,
We gotta do the
studied
quiz.
Google.
Yeah, I studied up there.
They got the new Google Assistant that I'm going to get on my next phone, so that I can just ask Google anything.
Oh, that's good.
good.
All right.
Listen to this.
All right, here we go. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. I'm proud to have as my co-host Mark Hanf of Pacific Private Money, one of California's fastest-growing mortgage investment firms. And joining us again is Mark Cooper of H&L Commercial. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 tanning certificates that's supplied by Bella Tanning, which they also have not just tanning, but they have a little booth there where you can actually reduce the wrinkles. Right? So when we get old, we're going to get those.
So spray on tan, spray off wrinkles.
That's it. Yeah, exactly.
There you go.
All right.
Nice.
We also have those special paintball tickets. They make great birthday and holiday gifts. Just click on paintball on the Best of Investing website. Today's trivia theme is generals. Let's see if you know your army. Okay, Mark, you're going to talk to us about not only appraisal but commercial real estate.
Yeah, absolutely. Should I just jump right in?
Jump
there?
right in.
Yeah, here we go.
man.
So I'm representing a seller here in Marin, and for the first time ever, I was told that the appraisal came back and it's short of our contract price
On a commercial property.
on a commercial property, and I'm trying not to disclose the address or any of that stuff.
That happens on residential, a fair amount of time, but not so much on commercial.
We hardly ever see that because the appraisers, first of all, they call me and they say, hey, give me some comps, which I give them, and they don't want to kill the deal. And so if they're close, what they usually do is they wimp out and they just say, hey, surprise, your property is valued exactly what your contract price is.
Oh, are you kidding?
Can you imagine that?
Yeah.
So,
it's supposed to be willing buyer, willing seller, so.
well, absolutely. Yeah, absolutely. So I just got word yesterday that one of our deals, we're maybe 50,000 short on the appraisal.
What's the total dollar?
Well, I'd say we're kind of in the $4 million price range.
And it's within 50,000?
Yeah, but let me tell you, between agents, that might be my entire commission,
Well,
right?
true, but I mean, if I'm an appraiser between $3,950,000 and $4 million, I don't get that. Well, just think of $4 million. That's close enough.
Absolutely.
That's a rounding error.
Absolutely. So what I said, of course, was give me the appraisal. What I've noticed lately is the banks, the lenders, are very reluctant to let those appraisals out. And what they'll say is, well, come on down to escrow, get ready to sign, get your pen out, and that's when we'll show you the appraisal. And of course, they're afraid they're going to shop the loan once they have appraisal.
Yeah, sure.
Yeah, so in this particular instance, we'll do a little cliffhanger. I'll tell you what we're doing later on in the show, but I'm representing the seller. The appraisal, I'm told, is a little short, and also I'll add that the deadline for the buyer to move forward with their loan was last Friday. So I'm told the appraisal's short, and the buyer is missing his deadline
Now,
to remove
in theory, the buyers would come up with that additional cash. In theory, right?
Well, if the bank said we're not going to lend because you're short, you need to make up the difference. Yeah, in theory, the buyer would come up, but everybody always points fingers and goes, "Hey, it's not my problem. That's your problem." So we'll get to that a little later in the show. What are we doing with this deal?
Okay, because do I get to guess?
Sure.
Okay, I would say, hey, you guys used the wrong cap rate. You got to lower that cap rate about 10 bips or whatever. And then
I like that. That's almost like a battleship term. Well, so just for the benefit of our listeners, for commercial properties, we look at 2 different things: price per foot, and we look at the market, similar properties in the neighborhood, size and condition. Price per foot of comps, actually sold properties, not what's available. Another thing we do is we look at rate of return and a prevailing cap rate. Let's say everything in Mill Valley is going for a 5% return.
Yeah.
What will this building generate when fully leased? And then we'll back into a value that way. So the first thing I got to do is get a hold of this appraisal and see how did they come up with these numbers? But the other thing that I said is the buyer has missed their time frame to remove the contingency. So that's where we got to play hardball, and they already missed one deadline. But like I said, we'll do a little cliffhanger later in the show. I'll come back and say, what are we doing about the short appraisal? And what do we do when someone misses a deadline, especially if it's not my client, but it's on the other side?
Yeah, that's ridiculous. I mean, it'd be one thing if it was like, $100,000 difference on a $400,000 property.
25%.
Yeah, 25%. Then I could see, okay, well, how are you going to bridge that gap? But why an appraiser would be like $3,950,000 instead of $4 million? I mean, that's to me is around.
And that's their first question is what's the contract price? Because they look at that and they scratch their head and think, okay, can I make these numbers work and come back at my value?
Yeah.
So that's the scoop.
Because I remember years ago in Hawaii, if the appraiser was was off more than 5%, they were liable.
Ooh.
Yeah. So there was a lot of very tricky, whatever the bank said that the minimum that was needed. Of course, the rules have completely changed since back then.
I like that. Let's get the appraiser on the hook.
Yeah. They still do it, but based on a bulletin board, that they call it, right? Because you don't get to pick your own appraiser.
Oh no, that's the lender's going to pick the appraiser.
And they don't necessarily pick it per se. They just sort of put it out the bid.
Mm-hmm. Yeah, so the lender picks the appraiser, and then the appraiser contacts me about 2 weeks later and says, "Hey, can you give me some comps? Because I'm in the East Bay."
Yeah,
right.
Yeah, exactly.
Yeah.
Tell you what, we're going to cut to our first commercial break, and again, the theme is generals. Before we do, we've got to remind people that the Weingarten Children's Festival, not festival, but they're having a masquerade party on October 29th in the Santa Clara Hyatt. And you got to check them out at listenspeaklearn.org. All right, so here's our first trivia question. Who was the general who got in trouble for slapping a soldier? Kind of a famous story.
Oh, yeah.
Right?
I know that one.
The first caller with the correct answer wins a free certificate for Tan Bella. And again, you get 3 tanning services with that. And they're kind of unlimited, so it's very, very nice what you're allowed to get with that. Call 888-912-1190 to answer this question. Who was the general who got in trouble for slapping a soldier? Don't touch that dial. The Best of Investing is going to be right back. All right, that's a nice quickie. Quick minute.
Next one was 8:10.
Yeah.
A little bit more time there.
Yeah.
So I'll come in and I'll talk about a couple of articles relating to commercial, and then you can just kind of react to it. Baloney.
I guess I'll scare up some stuff too. You know, it's I think here we've got that North Bay Business Times, and and what a lot of folks will do is it's kind of they toot their own horn. So there's you can do some PR about yourself about what deals you've done. And when I first got into the business, I thought, oh, this is pretty cool.
Yeah.
I'll put all my stuff on there. And the old timers would call me up and go, hey, congratulations, blah, 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 blah. And I thought, why am I giving my competition all of the information about the leases I'm doing,
It's
how
funny
long they are?
Because I went to school with for years through elementary grade and high school with Kate Nogaro, and so his name's always popping up on there, and so he does a real good job of self-promoting.
Oh yeah, shameless self-promotion. Yeah.
I finally got hooked up with Facebook.
Oh, nice. Congratulations.
I had a who's who thing when I was 23 and realized this is not really anything.
So after we answer the trivia questions, I'll chime in on some commercial stuff that I found, commercial articles.
Okay, here we go. Welcome back to the Best of Investing. Edward Brown here, along with Mark Hanf and Mark Cooper. First trivia question was, who was the general who got in trouble for slapping a soldier?
You know that one, Coop?
Boy, I think that's got to be something very recent, because anything more than about 50 years old is going to be par for the course.
Yeah,
So,
Would it be Patton?
It would be
Oh.
Patton. That's right. Very
I
good.
do remember that story, though. I wasn't sure.
Or George C. Scott, whatever,
right, whoever played him.
Whoever played him, yeah.
That's right.
All right, Mark Hunt, you actually have some commercial stuff to talk
I
about.
did. I knew Mark Cooper of H&L Commercial was going to be on with us today, so I happened to note a couple of articles this past week about the commercial real estate market, and a couple of headlines. Scrutiny of commercial real estate loans chills small lenders. Who writes these headlines? I just love this sometimes. Basically, financing commercial property, it says, has been a local bank's bread and butter for years, but a post-crisis push for loan growth may have prompted has prompted regulatory warnings about lax lending standards, and now small banks are shying away from that market. That's one article. And another one talks about commercial real estate prices are back to pre-crash highs, but transactions are falling. And the article blames sources of finances. They said their sources of financing are shifting. So my question for you, Mark, is what's happening with commercial real estate financing, or is this more of a national thing and maybe not so much regionally. Are you seeing any challenges with financing commercial real estate transactions?
Well, I can tell you what's happening here in Marin. And first of all, I do apartment buildings. I'll do owner-occupied properties, and so 1 to 4 units is tough. And there's a ton of disclosures, and a lot of the commercial banks are just shying away. So I kind of stay away from the 1 to 4. 5 units and up, the banks have a good appetite, and the rates are fantastic.
Yeah, it's still in the 3% range. Right?
Yeah, 3 to 4. I'm seeing 25, 30-year fixed on deals on multifamily.
Wow.
Yeah, so there's all kinds of deals out there, and it's pretty amazing. What I am seeing though is the market is drying up, and even Santa Rosa,
When you say drying up, what do you mean by
inventory.
Oh,
Inventory
okay.
for multifamily drying up, and warehouses. I can't find a warehouse for sale with a roll-up door in Marin at less than $1 million. And about 3
Wow.
years ago, I probably had 10 of them. I couldn't give warehouses away, and now there's just
Probably should have
nothing.
made that loan to a guy with a roll-up warehouse in Santa Fe. That
Yeah,
came to me a while back. I didn't believe his values at the
I got a
time.
garage.
There you go. And
Yeah,
best
it's
of
got a
all,
roll-up door.
best of all, you could have taken it back if he defaulted. Then
Yeah,
you'd have
that's
it.
it. That's right.
So my answer to that question, of course, here would be, the headlines that we're seeing. I don't know if they're talking about, huge portfolios. Are we talking about office buildings? I mean, commercial. One person's commercial is not necessarily another commercial. But I would say we're seeing great rates. Banks are very active, and right now it's really a question of inventory. And some guys are buying listings where they tell somebody, hey, yeah, your property's worth 3 times what you think it is. Here, sign here.
Sure.
So I'm seeing a lot of activity in Marin. We're still continuing to sell about a deal a month, a commercial property a month. I closed yesterday on something here on 4th Street in San Rafael, mixed-use building. And lots of activity. Market is tight, and lenders are lending. So I would say not so much on the chill and the scare and the crash. Now, one thing that I am concerned about is I'm seeing prices getting bid up. Probably to what more than these properties are worth. And I kind of joked with, I was joking with an associate today, and I said, we need some kind of disclosure that says you may be paying more for this property than it's worth.
Wait a minute.
That's actually that's not a silly idea, really. I mean, to kind of protect yourself.
Right.
We just add one quick thing. You mentioned about some people buying listings by saying, "Oh, it's worth 3 times as much." The interesting thing is sometimes you get kind of the opposite. I remember there was an agent when we were trying to sell our house who told us, well, no, it really only is worth X. And I think what he was trying to do is figure he could just flip it, not
Real
buy it
quick.
himself. Yeah,
Yeah.
he could just I got you an offer in 2 hours. And so we weren't.
And it's my sister.
Yeah, really.
Right.
So we weren't going for that. It's best to just kind of go accurate.
Right. Well, I mean, it's an art, not a science. And I think another thing you want to be aware of is dual agency. If anytime someone comes to you with a listing and then they pull out a buyer at the same time, you kind of go, what's going on here?
So you mentioned, Mark, that prices are fairly high, meaning cap rates would be low. This article talks about how the U.S. commercial real estate's average cap rate is back down to 6.5% where it was in early 2007, which they say was the last peak. During the financial crisis, this article says cap rates soared above 8%. Is a 6.5% cap rate, would that be considered like a bargain on some of the properties here?
I would say 6.5 is fantastic. If it's anywhere within about an hour of where we're sitting, 6.5 is great.
Well, especially if you can get 25-year fixed financing.
Right, and there's a little spread there. I mean, I know some guys that are like, hey, we'll take 6 caps all day long because I can borrow for less, and we see the upside where the rents are going.
Exactly.
So when you're looking at an article like this, I mean, 6.5 is you're going to be out in Reading or something like that.
Yeah, this is a U.S. average, so
Right.
it's certainly not an amalgamation of certainly Bay Area, which has high demand. And what's also interesting about this article, there's something here I like. This particular person who was interviewed for this article is quoted as saying he wouldn't call the current low cap rates commercial market a bubble, especially given the near record low interest rates, which of course help push cap rates down. He's quoted as saying, and I love this because this really, I think, is true for all markets. He says, bubble is a fighting word. A bubble is about poorly formed expectations. And I love that definition for, a bubble is poorly formed expectations. the last bubble in residential real estate in 2007 was definitely about poorly formed expectations, because the expectation was that prices were going to just keep going up because they weren't making any more land, right? So it was just going to go up, up, up. Certainly poorly formed expectations. Are there poorly formed expectations in today's real estate market, whether it's commercial or residential? I don't know that there are. What are those? What would they be?
Yeah.
And because
Well,
all signs still continue to point toward a shortage of inventory, a lack of new housing permits and places to actually build homes that aren't impacted by NIMBYism. And you've got low interest rates, and you've got a growing job market and a net immigration into the state. So just all that points towards
Well,
a
I'll
continued
tell you
healthy
what
market.
poorly formed expectations I see. I've seen people that were in the market to rent a warehouse a few years back, and they saw crappy warehouses for 75 cents a foot. They waited a couple years, and now they're saying, hey, where'd all those 75-cent warehouses go? I'm ready to rent one now. I said, you know what? They're $1.50 now.
Yeah,
So,
that's it.
yeah, so that's an expectation that you got to look at the current market.
Exactly. Okay, we're going to get to another commercial break, and when you're talking real estate, it's the three things: location. What's the last one?
Starts with an L.
Yeah. Okay. Okay. There we go. All right. Generals is the theme here. What is another name for a one-star general? The first caller with the correct answer is going to win that free certificate at Tambella, which, by the way, they have locations in San Francisco and Marin. Call 888-912-1190 to answer that question. And don't touch that dial, because the best of investing will be right back. Okay.
There we go. We got to talk about some private money here. This whole show is going to be commercial.
Yeah,
That's right.
do that.
Yeah, you're going to ramp up for that.
And we got to get into the.
I love that.
too.
A bubble is about poorly formed expectations. I'm gonna use that. That is an awesome quote.
That should be on your one of those.
I mean, it's just, it's funny because people use the word bubble. They throw the term bubble around all the time without any thought to what a bubble is, means, implies, and that's just, I love it. That's awesome.
A bubble to me makes me think it's a short-term thing that's not going to last.
Yeah, that's right.
Right?
Yeah.
It's not going to last.
That's what a bubble would be.
Yeah. Tricky.
Oh, by the way, Mark.
But a bubble also
So
implies
remember,
that
it's
gonna pop.
HL, no and, HL commercial. HL. It's not like Smokey the Bear, it's Smokey Bear. They got rid of the.
Is it really?
HL.
I didn't know that.
HL, no ampersand. The new improved HL.
Okay.
No and.
Remind everybody when
Yeah.
say who you is.
Yeah.
And Mark, we had an email we have for
We
you.
have a real email?
Sorry, on loan restriction rules helping or hurting the private loan business.
Oh, there you go. It's an email to you.
Yeah, I like it. That'd be
Yeah,
good. Do you want to do that next, or we want to do that the next one? We got 2 9-minute segments.
Whatever you want.
Well, I got my cliffhanger too. What did we do with the?
Yeah, that's right. But gotta get to the cliffhanger. But you want to get into just ask him.
I'll go at the end too. I think that's good. So if I do my stuff at the end,
Okay.
yeah.
You have a deal of the week too?
I don't. I asked the boys, and we got crazy calls of the week, but they're just like unintelligible people who don't.
Oh, I got a
should
crazy
know
call
better.
this week.
we got this one, but that's okay. We could just go into.
No, I've got more articles on residential, which I don't really need to go into.
No, I'd like
other
to
than,
hear that. That's cool.
you know.
But I don't even see.
Yeah, let me run into that, and then why don't you just go? Well, that leads me to a question
Okay.
about the private lending industry. Why don't you? That'd be good, so we can use up a bit of that
All right.
next 9 minutes, and of course, Mark just continue to chime in.
All right, here we go. Well, welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hanf and Mark Cooper. Second trivia question, which, by the way, is Mark Cooper from HL Commercial, not H and L. It's just HL Commercial. Wanted to remind everybody of that.
And is no longer with the company.
Okay. We fired him. Okay, what is another name for a one-star general?
That I don't know.
Brigadier.
Brigadier.
Brigadier general. That's a
Maybe
one-star
Charlie
general.
or something.
Yeah, no Charlies.
Brigadier.
Mark, you wanted to continue on here?
Well, we were talking last segment about commercial real estate. I thought I'd throw in a couple of nuggets about residential real estate. According to the California Association of Realtors, they expect California home sales to continue to increase in 2017, although a little bit more modestly than 2016. So they do predict a median home price increase next year of 4.3%, which would be following this year's year-end prediction of about 6.2%. I think we're actually a little bit higher than that, at least according to Case-Shiller. Now, CAR may use different statistics for tracking their median price. That would make, if it is 4.3% in 2017, that would represent the slowest rate of price appreciation in 6 years, which has basically been the real estate recovery since it bottomed out in around 2010, 2011. Also goes on to say, with the California economy continuing to outperform the nation, demand for housing will remain robust, even with supply and affordability constraints still very much in evidence. The net result will be California's housing market posting a modest increase in 2017. Now, they do predict here that most of that growth in California is going to be in Southern California and the Central Valley. They're actually predicting that the San Francisco Bay Area might experience a decline as home buyers migrate to peripheral cities with more affordable options. Well, that remains to be seen. I don't know anybody else that's predicting that prices will actually decline in the Bay Area, but there's a lot of things that are happening in the Bay Area, particularly in San Francisco, with all these new condominiums that are being built and to be released on the marketplace. That could certainly have downward pressure, which would actually, at least statistically, indicate maybe there are some price declines. So you got to kind of watch out. You got to compare apples to apples. Freddie Mac, which reports on mortgage rates, reported last week that mortgage rates were back to their lowest in 10 weeks, with a 30-year rate at 3.42%. So, we've said this several times on past shows. Was anybody we know predicting mortgage rates in the mid to low threes towards the end? Here we are in the fourth quarter of 2016, and a year ago at this time, all predictions, or I would just say most predictions, not all, there were always a few outliers, but most economists, including Freddie Mac, were predicting mortgage rates in the mid to high fours. Yeah. So it just goes to show you that we just continue to have and enjoy, I guess depending on if you're a saver, maybe suffer from, but if you're a buyer of real estate or investor in real estate, we are enjoying continued very, very low interest rates, and that's a good thing. Lastly, I have for residential real estate, older Californians are growing in number. 11.5% of the state's population in 2015 are 65 years and older, and that's increasing about 4% from the prior year. And I think that rate of increase is going to go up as the years go on. I think we're going to have an increasing rate of older people. 3 out of 4 baby boomers are homeowners today and will remain so in retirement, though most will sell and downsize, purchasing a replacement home of equal or lesser price. Now, contrast that with the millennials, first-time home buyers between 25 and 34. Only 35% of them own a home, and that's actually down from 41% from a few years back. So they're expecting that homeownership rates for millennials might actually dip between now and through 2018. But when you pair the millennial home purchases with the growing, with older Californians downsizing, they predict that if you pair the mass relocation of baby boomers with Generation Y's entry into the housing market and watch home sales volume grow considerably between 2019 and 2021, the great confluence of retirees and Gen Y will create a fluid and stable housing market for California. So there's a pretty robust prediction for you. Again, it's kind of like everything, you have to take it with a grain of salt. Does that mean the next real estate cycle is nowhere in sight? I don't know. I mean, people ask me on a pretty regular basis, where do you think the market's going? And what I tell them is, well, I don't see price declines in the near term.
Well, that kind of leads me a little bit to the email we received from you, or for you, or thinking because of the millennials not purchasing and all that.
Yeah.
Here was the question. It says, are loan restrictions rules helping or hurting the private loan business?
So for new listeners, I'm Mark Hanf. My company is Pacific Private Money. We are a private money lender, private money real estate lender, also known as a hard money real estate lender, but we for the term private money in this new era, since the company is new since the market correction. We launched in 2008, and unbeknownst to me at the time when I started Pacific Private Money, it was really based on an idea that this was an area that my personal skills might benefit in, and as it turns out, Dodd-Frank, which came around it started to become a glimmer in the eyes of Misters Dodd and Frank somewhere around 2010, 2011, and became this huge bill that was passed shortly thereafter. And over the last several years, the Dodd-Frank financial reforms have resulted in a number of new banking and lending regulations that were designed to protect the consumers, but in many ways had unintended consequences that really made it harder for many consumers and real estate investors to get bank financing, also known as conventional financing, that low interest rate, 3.5% financing that we're talking about. And that has been a boon to companies like Pacific Private Money, who are an alternative source for financing that aren't as heavily regulated. We're not unregulated. We are restricted in the types of loans we can make, particularly to consumers, but to real estate investors, we've really been the catalyst for the reclamation of the older real estate homes, particularly foreclosed homes that were sorely in need of being remodeled and repositioned for entry-level and turnkey home buyers. And so really we in the private money lending industry have said yes when the banks have said no. And today, even more than ever before, we see a pretty consistent volume of loan requests coming in to Pacific Private Money from mortgage brokers, from realtors, from bankers who are referring clients to us that got denied for bank or conventional financing for any number of reasons, sometimes just simply because they couldn't do the loan fast enough to accommodate the borrower's request. And because of the tight housing market, and people have heard me say this again and again on this show, the tight inventory and tight housing market means that cash buyers are more often than not winning out on offers to buy homes. And so if you want to be like a cash buyer, you can use a private money loan and close quickly. We close in as little as between 5 and 10 business days. So for more information, give us a call at Pacific Private Money, 415-883-2150, or visit our website at pacificprivatemoney.com.
All right, we're going to cut to another commercial break. Before we do, we want to make a special mention here for this. You ready for this? Are you ready for the best holiday show ever? Broadway celebrates the holidays in wine country with Broadway performance from, these are performers who were performed in Wicked, Mamma Mia, and all that. They're going to be doing something called Joy to the World, and it's going to be at the Luther Burbank Center, which we all know is in the North Bay here. Check them out at BroadwayHolidayShow.com.
Nice. Performers who perform. Those are my favorite type of performers.
Yeah, they're very nice. Okay, here's our third trivia question. What general was known as the Desert Fox? Call 888-912-1190. First caller with the correct answer is going to win the tanning certificate. Don't touch that dial. Best of Investing. We'll be right back.
All right, the Desert Fox.
Desert Fox.
The only other general I know is MacArthur. Have to be my guess.
Yeah, well, he was in the desert, was he?
But he said he'd be back.
Desert Fox.
He said he'd be back. Is that right?
I'd be back.
I'd be back.
I will return. That's okay.
So, K-Dow, what's the 1220? I've been guessing.
12:20.
It's a new guessing. It doesn't work in radio. You can't guess. That's
Guess
somewhere.
you get it at 1200. 1220 at noon on Saturday. Good.
And it's funny, if you listen to other shows, we probably have, I'd say, close to the best show on there.
At noon on Saturday, right? Or on the show, you're talking about on the station.
Yeah, the weekend shows are
some of them are kind of boring.
Yeah, they're boring.
Well, did I tell you
usually
guys?
one guy talking about just talking slowly about the same thing.
Oh no, just selling his own stuff.
Selling annuities.
Oh, so I was at a party and this really cute woman walks up to me and goes, "You're Mark Cooper. I heard you on the radio. I love that show, The Best of Investing."
Ah, you said she was cute?
She was cute.
Did you take a picture?
Yeah, well, my wife was with me, so selfie.
Let's do
We
selfie.
Don't say that the
Let's do
other
it
guys will
three-way.
see who it is.
Post it to the
Three-way.
website. Post to the website.
I had one lady at the beginning. She answered certain
Stalker.
question,
No.
and when I called her at the time, I couldn't quite hear the email or whatever. So I
Couldn't hear I can't hear those emails either. Right? Couldn't
Couldn't
hear
hear
the
the email,
email.
but they
Email with you?
record though. It's emails they record.
Okay.
And so she goes, I don't remember what it was, but she says, I called in just because I like hearing your voice.
Nice. That's play Misty for me.
So you wanna go,
exactly.
go to Mark for the rest of the story?
Cliffhanger.
Yeah, rest of the story.
The
And
rest.
Okay.
well, let me get
And
your
you gotta do
email,
your timer so I can see.
Right,
Yeah.
and now you know the rest of the story.
Yeah. Well, yeah. You like
Yeah,
last
yeah,
time you didn't do the timer.
I
so
know, I totally.
Well, you can
Yeah,
see
so it's
me when I'm
9:19 now.
Yeah.
Yeah, when he ruffles the paper to that means it's never shut.
Get ready? So I'm going to go into the email because it'll go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host. I'm still Edward Brown. Mark Hanf and Mark Cooper are with me in the studio here. Last trivia question here was, what general was known as the Desert Fox?
Rommel.
Yes.
Whoa.
Yeah, you kept thinking, who was it?
I
Who's
can do out of three
Rommel?
today.
Did he get the tanning thing? He gets these right.
Oh, you know what?
He's already pretty.
He's
tan.
already pretty tan. Okay. So, Mark Cooper, we have an email that actually is very similar to the story that you had mentioned, and that'll get into, because you told everyone you had a special surprise at the end of the story.
The rest of the
The
story.
rest of the story, exactly. Which says here, what happens when you represent a buyer on a purchase and you have an appraisal contingency and the property doesn't appraise? Does the buyer have a right to see the appraisal if they paid for it?
Oh, okay. That's a great question. We were talking about appraisals. I feel that if someone's paying for the appraisal, they should definitely see it.
Absolutely.
But what I'm seeing out there is that I mentioned before, the banks are holding off. They don't want the buyer to have the appraisal because they're afraid they're going to shop the loan. If you're a buyer and there's an appraisal floating around there, demand the appraisal.
Absolutely.
Tell them I paid for it and I want to see it.
Yeah.
Agents can't request the appraisals. It comes from the buyer through the bank. So that's really the conduit. But if you're working on an investment property, if you're representing yourself or you have an agent, make sure to request that appraisal in writing as soon as possible. If you have an appraisal contingency, you want to see that before you remove the appraisal. And I'm getting the runaround from just about every bank about who's got the appraisal and where is it, and we can't release it and everything else. So I would say definitely you paid for it, demand that appraisal.
And you can't demand it from the appraiser because the bank
No.
is the one who
No,
orders it.
whoever's you're working with at the bank, tell them when the appraisal is ready, I want to see that appraisal and get a hold of that appraisal. So we had a couple things going on. I'm saying I'm working on this deal, but I represent the seller. Buyer has missed their deadline. Last Friday was when they were to remove their appraisal and loan contingency. And I'm told that appraisal did not quite meet the number of the contract price.
Just under.
So first of all, when I'm working with I use the car contract, California Association of Realtors, and in there's a clause that says notice to perform, and it'll either be 2 or 3 days where if the buyer or seller misses a deadline, that other party gives them a notice to perform. The notice to perform would say, dear buyer, you were to remove your contingency by Friday. You didn't do that. And let me tell you something that's very important. In commercial real estate in California, or real estate in general, most of the contingencies are active contingencies. It's not like you miss a deadline and you're buying the property. You have to actually say, I hereby remove all of my contingencies. I got my loan, I removed my loan contingency. If the deadline was Friday and they missed that, it doesn't mean that they have missed their loan contingency. They still have to physically remove that contingency. They have to use a contract to say that. So that's the difference between an active and a passive contingency removal. So they need, unless the contract said, if you don't remove your contingency by Friday, you have lost your loan contingency opportunity. In this case, we're saying, dude, you were to have said you're good on Friday, you didn't. So the first thing that I'm going to do is I'm going to issue a notice to perform that says, you missed your deadline, you have 3 days to remove that contingency. My recourse is to cancel the contract. I can't go back.
Keep the deposit?
We can't keep the deposit because they haven't removed the contingency.
That's right. Exactly.
Right.
Yeah, that's right.
If they had removed their contingency, then we can keep the deposit. And another thing that it will typically do on a contract is liquidated damages.
Yeah.
And that means that the actual amount of deposit that is held by the escrow company, both parties agree that if the person removes all their contingencies and they don't move forward, that's the actual damage that the seller will suffer for the property being off the market. So we've got liquidated damages. Now this same buyer, of course it's anonymous, I'm not disclosing that. The same buyer said, hey, I'll close in 30 days, no problem. I need 21 for the loan and 30 days to close. And I said, you know what, it's going to take longer than that. You need more than 30 days. And he's like, no, trust me, I've got this under control. So about 30 days ago, he said, hey, I need 30 more days.
Of course.
So we had money in escrow, and what we said was, we will give you 30 more days, but we want you to release money from escrow to the seller right now that's non-refundable. Go hard. We would say go private because we don't say hard here, right? So we would say release the money from escrow to the seller. I don't care if you buy this property or not. You're giving us money right now for 30 more days. So they missed another deadline. What we're doing?
Did they do that?
We did. They went hard. They
okay.
increased their deposit, say 20 grand.
Okay.
Okay. They actually, the money was on deposit, so they released 20,000 to the seller and said, give me 30 more days. And I said, you know what? You guys got 30 more days, and that's it. That was last Friday. The first thing I'm going to do is do the notice to perform. Now, the question is they missed their deadline. The other thing is, now that I'm told the appraisal didn't hit, are they going to come back and ask for a credit, or are they just going to move forward and buy this property? And that's going to be our second cliffhanger, because I haven't seen it yet.
Yeah.
But if I was representing the buyer and the appraisal was strong, I may come back and ask for some kind of credit or a compromise off that, because the number wasn't what it was to be represented.
Yeah, and the buyer had no control over the appraisal.
Nor did the seller. I mean, it could be a crappy appraisal if they didn't find the right comps, or they used something that was outside of the market, or a property that needed work, less marking.
Then the seller says, hey, I don't have to sell it to you for that price,
Right.
so I'll move on. Or if he doesn't have another buyer in tow,
Oh, we've got other buyers in tow.
Oh, you
I'm
do?
getting calls. I'm telling people, hey, the deadline was Friday. Let me see what I can do. So that's what I would say here. Notice to perform. Take a long, hard look at that appraisal, and really figure out, what's going on, and is that buyer going to ask for credit, and that's yet to be seen.
If the buyer doesn't ask for credit, and the buyer doesn't have the money, I guess the buyer could say, listen, seller, can you carry a very small second behind a very large first for a small period of time?
Yeah, and I usually tell my sellers, you don't want to be in second position. Now,
So it's almost like just lowering the price anyway.
Yeah, I mean, hey, of course, what everyone points the fingers at is they go, wow, you guys are making a big commission on this deal.
Yeah.
Why don't you kick in a little bit of money here? And I'm repeatedly telling the buyer's agent, hey, if you ask for a credit, it's coming out of your commission.
Yeah.
So we'll see what happens. Jimmy, I love you if you're listening.
Jimmy's going, yeah, I love you, but I don't know how much. Very interesting. Again, so you represent both.
I'm representing only the seller.
In this case.
But
sometimes you represent
in Marin, I work with buyers and sellers of commercial property. Typically, we're going apartment buildings, 5 or more units. Most of my deals are between $2 and $10 million, and we're seeing on and off market properties. HL Commercial and my team, we do over a sale a month, and I do about 2 leases a week. So we're probably the most productive commercial team.
I knew you were good, but I didn't know you were that good.
How does he do it?
Yeah. Well, and the thing is, okay, so if someone from Lafayette is listening and says, gosh, the guy sounds really good, but you're not going to represent all the way to Lafayette, you probably have contacts, don't you?
I have associates in the East Bay, and what I like to be is I'm the big fish in a small pond, and Mill Valley is really the center of my universe, and I kind of work north from there. But I stop right around Terra Linda, and there's guys who do what I do in Petaluma and Santa Rosa and the East Bay that are really good, and I can make those introductions.
Okay.
I can make those introductions.
So how would people get a hold of you?
My cell phone, 415-608-1036. That's my cell. And my email is mark, M-A-R-K, @hlcre.com. I like to say hungry lion crosses river easily.
Nice.
You remember that one? Okay, we've got about a minute before we have to go to a break.
So, we've talked about how for distress sales are becoming a smaller and smaller piece of real estate transactions, and I was actually surprised to see a graph that showed that they're still double what they were leading up to the real estate correction in 2007. During most of 2006, distressed sales, and distressed are foreclosures, REOs, and short sales combined, were 2.5% to 3%, and this is the national market. Well, as of June, this number continues to trend down for the year in 2016, but it's still 8%. So, 8% of sales. So I thought that was kind of interesting. It's not impossible still to find people, although you would think that we've processed most of the foreclosure and short sale inventory, but there are still people who are in neighborhoods and markets where they have not yet recovered in value, or they've had a life distressing event. So there's still opportunities out there for those of you who look at door knock. And at Pacific Private Money, we actually make loans to people who find foreclosure opportunities to fix and flip. So we know, and because of our continued volume of inquiries, we know that there's a market out there. So,
all right, tell
very
you what,
interesting.
we're going to cut to another commercial break. When we come back, Mark, I want you to talk about the performance of your fund.
Absolutely.
In comparison with a lot of other ones, you're actually a lot higher.
Mhm.
And then we're going to have some closing comments for the day. So stay tuned. You're listening to The Best of Investing. Don't touch that dial.
Yeah. All right. Lots of nuggets.
Lots
Sometimes
of
I can
nuggets.
slip them in there, and
Oh yeah.
and I have like 5 or 6 of files like this.
Oh,
for
the
just-
radio show too.
Yeah, just
like
stuff.
here we
And sometimes I'm like going back and looking at stuff from years ago because the predictions sometimes
amazing.
are.
go. Who would have thought that 3.5% the mortgages, huh? I think I was saying I had a Greenpoint mortgage, 4% interest only for 5 years.
Mhm.
Then I went to LIBOR plus 2 right at the right time. And so LIBOR was like nothing, half, right?
Yep.
So I had 5 years at 2.5, and
That's just nuts.
yeah, 5 years at 2.5, amortized for 20 or something like that. And then I just did my U.S. Bank 3.375 30-year fixed
Oh,
at the
that's
big
awesome.
cash out.
Yeah, I did
Yeah.
for their house.
Yeah, for my
Yeah, I did.
home.
First Republic did a
Yeah.
great job for me. 2 and 7/8.
Wow.
15 year?
Yeah. Fixed for 7 years.
Oh.
Yeah,
Yeah, I'll talk to you in 7 years.
I know.
I,
I'll pay the thing off.
I felt good about that LIBOR. It was a nice ride.
Yeah,
Yeah.
exactly. All right,
I
here we
got
go.
some 10 seconds.
Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and Mark Cooper of HL Commercial. All right, so Mark Hanf, how is your fund doing?
So at Pacific Private Money, we have a mortgage pool fund that has been growing for the last little over 3 years. We call it the Pacific Private Money Fund, and we use those monies to make short-term real estate loans to people who need to close quickly or who have another need for fast, reliable financing that they intend to, pay off within a short period of time through a conventional bank loan. That's really what we primarily strive to do. Our niche market is we want to make bridge loans. We want to make loans to people who need it for a temporary basis, not necessarily borrowers in distress who just need to borrow against their equity and really have no idea how to pay that back. That's not the kind of loans we make. There are people out there that will make those loans, but we really focus on the bridge loans. And we've been able to produce a yield so far this year to date. We're at about just under 8%. We're at about 7.8 to 7.9 in that range year to date. Our target's 8%, but we have seen some competition in the marketplace that's pushed that yield downward a little bit. But hey, the high sevens, I'm still pretty excited about producing a yield like that. And other mortgage pool funds throughout California are producing less than that. So we've been, and some of those guys are trying to do that because, or are paying in the low sevens largely because they lend the money out at lower prices than we do, but they are looking to do longer term financing. They're more of the subprime 7 and 8%.
Well, some of them are also
situations.
using leverage, which is a little scarier.
Right, so we're an unleveraged fund with a weighted average loan to value in our portfolio of about 55%. We've got $20 million under management right now. We're looking to grow that fund to $50 million. So if you're interested in how you can earn upwards of now the high sevens with a target of around 8%, on your savings and IRA accounts, we have a lot of IRA account, Roth IRA and other self-directed IRAs are eligible for our fund. For more information, you really ought to give us a call or check out our website. Our website, of course, is pacificprivatemoney.com. Or give us a call, leave a message, we'll call you back and send you some information about the fund. And there's a lot of we try to be very transparent. We not only have offering documents, but you can see a portfolio list of the loans we have in the fund. and the types of loans we do. Plus,
And you also do little seminars.
we
once
do
a
a
month?
monthly seminar at the last Wednesday of every month. And so, what that date off the top of my head, I think it's October 26th or 27th. I think is October 26th at 6 p.m. in our downtown Novato offices. Come by. And,
Good hors d'oeuvres.
yeah. Oh yeah. Absolutely. We always have food and drinks and a little 40-minute presentation on the fund. So for more information, pacificprivatemoney.com or call 415-883-2150.
Very good.
All right.
Mark, did you have any-
How do we get a hold of you for commercial for information about commercial real estate investing, or if I want to lease my commercial space?
Sure. My territory is Marin and Sonoma, primarily Marin County, and my number is 415-608-1036. One other question I'm getting is owner occupants, and what are they seeing out there? Can I buy my own building or office condo? And I actually have probably the least expensive office condo in Marin right now, $399,000. Over by Home Depot in San Rafael, and I'm seeing SBA loans 10% down. So with 40 grand, you can stop renting and own your own property. What savvy guys are doing is buying it in their own name and renting it back and saving on income taxes.
Yeah, especially with not only interest rates low, but rents going up. That's a good idea. All right, guys, we're going to cut out for the day. Here's our thoughts for the day. More than 10 people per year are killed by vending machines. I told you guys those Snicker bars were very dangerous. And get this is funny. When a massive power outage struck Southern California in the 1990s, Los Angeles residents reportedly called 911 to express alarm about strange clouds hovering overhead. You know why? They were seeing the Milky Way for the very first time.
I love it.
Isn't that great? Because you could not see over those clouds. What do they say when the smog clears over Los Angeles? UCLA? Okay. All right, and with that, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. On the money, 5-10 exactly.
That was good.
That was good.
Throwing that in
Yeah.
at the end there.
Little
Very, very
plug.
good. That's,
Yeah.
That's perfect. I mean, you got to plug yourself.
Shameless